Well, gents, let us get to what you're buying. Your stock picks for today. Grant, what are you hanging your hat on?
On this note, I'm buying Meta. They reported yesterday. It's still an incredible business. They've got 3.4 billion daily active users. I mean, America is only 360 million people, so they are global, a truly global business. Ad revenue growing, impressions growing, price of ads growing, and they're still growing operating margins as they're spending on their capex. It's just an incredibly powerful franchise. There is some regulatory risk about Instagram and WhatsApp maybe being broken up. I think in the US that kind of thing is difficult to predict. So taking that out of it, at 22 times earnings, this quality business, do I want to own it 5, 10 years from now? Will I look back and say, I'm glad I owned that? And, I think it's a yes, and I think it's a great business. So yeah, that's my pick, is Meta.
Okay. Ricus, where are you finding opportunity today?
Yeah, it's sort of staying in the tech side of things, but locally, Altron, which is due to report their earnings a little bit later this month. They've already had a trading update and expecting a EPS increase of, I think, about 40%, which is great, except that they've also warned that their second quarter wasn't all that great. So I would tend to wait and see what the price done or what the price is doing around the earnings release. But I think just taking a look forward, sitting on a forward price earnings of probably about 11 or 12 or something like that. And they've got earnings growth of 14, 15% going forward, which I think is quite maintainable. So it's exposed to the right kind of sector because they do provide things like cloud services and helping companies through that. Obviously, Netstar is the other side of the business, which I think, although competitive, should be doing okay. So with that kind of earnings growth rate, the refocus that the company has done over the past number of years, it's a far better run company. I think on that kind of valuation, they're probably too cheap, and they've had a nice pullback, and I can see them quickly or possibly retesting its high of a few months ago, which would give you about a 17-15% appreciation in price plus about a 3% dividend yield again. If you can do 18% in a volatile market such as this for the next year, I don't think you're on a bad wicket.
Well, thank you so much for your time and for your analysis today, gents. Really appreciate it. That's my guest, Grant Nader from Benguela Global Fund Managers and Ricus Reeders from PSG Hole-in-One Ruimsig. Do remember that Stockwatch pre-records on a Monday and Wednesday at 1 p.m. and is live at 6:30 p.m. on a Tuesday and Thursday, while Stockwatch this week is live at 12:30 p.m. on Fridays. Keep that in mind and keep sending your questions. For now, that's all from Stockwatch this week, but do stay tuned for lots more coming up right here on Business Day TV.